China is a story of despair that we can't ignore. For years, we were fooled into believing that China was a success story, a land of endless possibilities that no one could match. We were so wrong. The truth is finally out, and it's not pretty. China has been hiding the reality of their economy for years, and it's nearly half the size they claimed it was. The world thought China was the leader in technology, but in comparison to other Asian countries, their progress is almost negligible. The once expanding population is now shrinking by over 1 million people a year, a sign of a country in trouble. But that's not even the worst of it. The Chinese housing market is collapsing, and it's not a secret. We've all heard about the ghost cities and Evergrande, but now we know it's far worse than we thought. The Chinese government's decades-long policy to stimulate economic growth has led to reckless debt-fueled construction of everything, from railways to dams to cities. But it's the cities that are the real problem. Developers have built entire new cities, sold apartments to unsuspecting investors, and left them empty. And now, the bubble has burst. The truth is coming out, but it's being ignored by the media and the world. The situation in China is dire, and it's only going to get worse. We need to open our eyes and see the truth before it's too late. China's story is not a success story, but a warning of what happens when greed and deception rule. The world is changing, and not for the better. The signs were there for anyone to see, but we ignored them, believing that things would get better. We told ourselves that the economy would recover, that jobs would return, and that everything would be okay. But that was just wishful thinking. The truth is that the bubble started to get very visible a few years ago, and we should have seen it for what it was. The Chinese Communist Party tried to stop it, but it was too late. The debt that was fueling all of this growth and construction suddenly stopped, and developers had no cash to finish their projects. The property companies started to collapse, and the housing market began to crumble. The legacy media took almost an entire year to start reporting on this, and by then, it was too late. The financial storm had already hit, and no one was safe. Tens of thousands of people have been laid off in recent weeks, and even those with high-paying jobs are struggling to make ends meet. We're living in a world where more than half of Americans who make six figures are now living paycheck to paycheck. It's a sad state of affairs. But even as the stock market stagnates, the wealthy are pouring hundreds of millions into assets that aren't correlated to the stock market. And according to a report by Citibank, the asset with the lowest correlation to the stock market is contemporary art. That's right, art prices have more than doubled the S&P 500's return over the last 26 years. It's hard to know what to do in times like these. It's easy to feel helpless, like there's nothing we can do to protect ourselves. But maybe we need to start thinking outside the box. Maybe we need to start investing in things that aren't traditional investments. Maybe we need to start looking at the world differently and find a way to thrive in this new reality. The world is changing, and we need to change with it. It's time to start thinking differently and find new ways to succeed. It's been a year now since the collapse of the Chinese property market, and the aftermath is still being felt by millions of people. Lu Shu, a senior researcher at China Index Academy, has been diligently working to uncover just how bad the situation really is. But what he's found is nothing short of catastrophic. The Communist Party has been hiding the truth about the crash, claiming that the property market will recover under their watchful eye. However, the reality is much darker. As many as 30 multi-billion-dollar property developers have already defaulted on their debt, including the two largest in the world. Bonds issued by these companies are worth only cents on the dollar, and investors are unlikely to see any of their money back. But the real problem is not just the collapse of the property market. China's economy is entirely based on construction, and without it, over 100 million jobs will disappear, and the country's growth will reverse in an instant. The Communist Party's attempt to stop the bubble from growing has only made the situation worse, and the Chinese people are paying the price. The housing market crash has led to a mortgage boycott movement that is growing in strength, and the CCP has been forced to resort to printing trillions of dollars in an attempt to stabilize the property sector. The chief of research at the Bank of China has called for boosting domestic demand, consumption, and investment, and that's exactly what they've been doing. The amount of stimulus being pumped into the economy is impossible to quantify, but it's clear that it's not slowing down. The Chinese M2 money supply increased by over 7 trillion won in January 2023 alone, and the trend is continuing. The CCP's zero-COVID policy, which was essential in maintaining control of the country, has been abandoned in a last-ditch attempt to keep the economy moving. The situation in China is dire, and the emotional toll it's taking on the Chinese people is immeasurable. The collapse of the property market has shattered the dreams of millions of Chinese citizens, and the prospect of a depression looms on the horizon. The future of China is uncertain, and the only thing that's clear is that the road ahead will be long and difficult. The Chinese housing market had once been a symbol of strength and prosperity, but now it was in shambles. The market crash had hit hard, and the Communist Party was desperate to revive it. They had tried everything from printing money to relaxing mortgage policies, but nothing seemed to work. People were losing faith in the market, and the government's actions only seemed to make things worse. One of the most absurd policies was the fact that people in China could now get mortgages at the age of 70. This was unheard of in the West, where the upper age limit for a mortgage tended to be retirement age, typically around 50. But in China, the Communist Party was so desperate to get people buying properties again that they had raised the age limit to 95, which was simply ridiculous. Despite all these efforts, the market was still in freefall, and leaked data suggested that things were going downhill fast. The situation was proving too much for the CCP to handle, and the lack of foresight was astounding. The government's solution to the problem was the very thing that had caused it in the first place, and this lack of understanding only served to exacerbate the crisis. People had lost their homes and their livelihoods, and the once prosperous economy was now teetering on the brink of collapse.